recent past time, we all heard the merger of some significant merger regarding Idea and Vodafone, which will be merged and become VI. Then Bank of Baroda, Dina Bank or Vijaya Bank merge and become Bank of Baroda Vijaya Dina Bank, and Syndicate Bank merge with Canara Bank. So let's discuss what is merger, the concept of merger, pros and cons of merger, types of merger, method of accounting for merger and acquisition, and process of merger and amalgamation, and then question answer session. So we are going to discuss the following concept. First is merger, then amalgamation, arrangement, demerger, acquisition, and slum sale. Merger. Merger is a process wherein two separate businesses combine into a single legal entity. The shareholder of the transferor company will receive share in the merged company in exchange of the share held by them in the transferor company as per the agreed exchange ratio ascertained by the registered valuer. So here is a company A and B which is merged together and become B. The next concept is amalgamation. An amalgamation is a combination of two or more companies into a new entity. Amalgamation is distinct from merger. Neither company involved survive as a legal entity. Instead, a complete new entity is formed to house the combined assets and liability of both the companies. Here is the example. Company A and B amalgamate and become a new company, that is company C. The next concept is arrangement. An arrangement includes a reorganization of the company's share capital by the consolidation of share of different classes, or by the division of share into shares of different classes, or by both the methods. All modes of reorganizing the share capital include interference with the preferential and other special right attached to the share. So here is the example. Suppose there is a company which transferor company A and transferor company B merge with transferee company, that is C. Then the A and B's existing will be vanished and only the transferee company will exist. Then the transferee company will again demerge into company, resulting company C and X. That means the company C break into two separate companies, that is C and X. Then arrangement also includes merger plus demerger in one single scheme, also, and merger plus capital reduction, merger plus demerger plus capital reduction, conversion of equity into preference. The next topic is demerger. A demerger is a corporate restructuring in which a business is broken into components, neither to operate their own or to be sold or to be liquidated as a divestiture. So here is an example. There is a company A. Wait a minute. There is a company A which has two divisions, division A 1 and division 2, and the company wants to break the division and become a separate company. So the company decided to demerge and division 2 make become a resulting company B. And in such a case, the shareholder of the company A will get the share in company B. that is the resulting company. The next concept is acquisition. An acquisition is when one company purchases most or all of any another company's share to gain control of that company. Purchasing more than 50% of targeted firm's stock and other assets allow the acquirer to make decision about the newly acquired assets without the approval of the company's other shareholders. For example, Flipkart in the recent past time acquired the following company, for example, PhonePe, Myntra, eBay, and etc. We often used to hear that big fishes in the ocean will eat the small fishes. Just like in this competitive market, the companies do the same. Then the slum sale. As per Section 2, Clause 42C of the Income Tax Act, slum sale means the transfer of one or more undertaking as a result of sale for a lump sum consideration without values being assigned to the individual assets and liability in such sale. Here is a company which is to be sold to some other person or company, and in return the lump sum amount will be paid by the purchasing company. The next topic is pros of merger and amalgamation, which will be discussed by my co-speaker Survi. Over to you, Survi.
Thank you, sir. Thank you for the introduction. I hope you guys are enjoying our session. So let us now talk about pros of merger and amalgamations. Increases in market share. When company merged, the new company gains a larger share and market share and gets ahead in the competition. Tax purposes, if a company generates a significant taxable income, it can merge with a company with substantial carry forward tax losses. After a merger, the total tax liability of the consolidated company will be much lower than the tax liability of the independent company. Expand businesses into new geographical areas. A company seeking to expand its business in a certain geographical area may merge with another similar company operating in the same area to get the business started. Prevents closure of an unprofitable business. Merger can save a company from going bankrupt and also save many jobs. If a firm has been badly managed, it could find itself going out of business. A merger or a takeover may be a way for the firm to survive and many jobs to be saved. And the last pro is that it reduces the cost of operations. Company can achieve economics of scale such as bulk buying of raw materials, which can result in cost reductions. The investments on asset are now spread out over a large output, which leads to technical economies. The cons of merger and amalgamation. 1. It raises prices of the product or services. A merger results in a reduced competition in a market and a larger market share. Thus, the new company can gain a monopoly and increase the prices of its product or services. Prevents economies of scale. In case where there is a little in common between the companies, it may be difficult to gain synergies. Also, a bigger company may find it unable to motivate their employees and achieve the same degree of control. Thus, a new company may not be able to achieve economies of scale as before. Creates unemployment. In an aggressive merger, a company may opt to eliminate the underperforming assets of the other company. It may result in employees losing their jobs. Creates gaps in communication. The companies that have agreed to merge may have different cultures. It may result in a gap in communication and affect the performance of the employees. The next topic is types of merger. There are various types of merger. First, co-generic merger. Second, vertical merger. Third, horizontal merger. Fourth, conglomerate merger. And fifth, reverse merger. Let us get into detail. Co-generic merger. A co-generic merger is a merger between two or more businesses which are related to each other in terms of customer groups, functions, or technology. Example, combination of a computer system manufacturer with a UPS manufacturer. You can see in the example, company A featuring product A and company 2 featuring product B merge into a new combined company which produces both the product. Second type, vertical merger. A vertical merger is a kind of merger in which two or more companies in the same industry but in different fields combine together in business. In this example, we can see that the cotton supplier merged with the textile manufacturer to merge into a new company. Horizontal merger. Horizontal merger is a kind of merger in which two or more companies engage in the same industry and same field combine together in a business. Example, Volkswagen and Porsche. Both occupy automobile space, merge to cut costs and share engineering. Conglomerate merger. Conglomerate merger is a kind of merger in which two or more companies engaged in the different kind of industries combine together in business. As per our example, let's suppose Facebook wants to enter in a food delivery business. Then it can either combine itself, merge itself with Zomato or Swiggy. The last merger is reverse merger. In this merger, a reverse merger is a merger in which a private company becomes a public company by acquiring it. It saves a private company from the complicated process and expensive compliance of becoming a public company. Instead, it acquires a public company as an investment and converts itself into a public company. Or when a sound financial company is merged with a loss-making company. In this example, we are looking at that private company is buying a public company and becoming a new public company. Methods, our next topic is methods of accounting for merger and acquisition. There are two methods, pooling of interest method and purchase method. Methods of accounting for merger. Pooling of interest method. Pooling of interest method of accounting is a method in which the assets, liabilities, and reserve are combined and shown at their historical values in the books of the transferee company as of the date of merger or amalgamation. All the assets and liabilities of the companies undergoing a merger are aggregated. Difference in the amount of consideration and share capital is adjusted with the reserves. The identity of the transferor company is kept intact. Purchase method. It is a method for acquisition. Purchase method is an accounting method where the assets and liabilities of the transferor company are shown at their market value in the books of the transferee company as of the date of acquisition. Only those assets and liabilities are recorded in the books of transferee company which are taken over by it. Surplus or deficit of purchase consideration over the net assets required should be either credited or debited as capital reserves or goodwill. The next topic is process of merger, which will be discussed by my co-speaker, Sam.
Thank you, Survi. Our next topic is process of merger. I concise the whole process of merger into 12 simple steps. The first is documents and information received from client, then preparation of application, filing of application to NCLT, hearing, first order compliances, then preparation of petition, filing of the petition to NCLT, then hearing, then second order compliances, obtain report from statutory authorities, then again hearing, and at last post merger compliances. Now let's discuss each one by one in detail. Documents and information received from client. So here is our client and this is our office, Manta Binani and Associate. And this is the document which we required for preparation of the application. So here is our document comes and the documents includes MOA, AOA of the companies, financial statements of all the companies which are going to be proposed to be in merger, latest list of shareholders, latest list of creditors, auditor certificates, PAN cards, valuation report, and such other details which are necessary for the purpose of preparation of application. The step 2 is preparation of application. So here is our form and this is how we prepare the applications. The application includes cost title, notice of admission in form NCLT2, list of dates and events, synopsis, application in form NCLT1, affidavit verifying application in form 6. Then we have to annex some annexures like MOA, AOA of the companies, financial statements, scheme of amalgamation, board resolution, PAN card of all the companies, valuation report, determine valuation report by a registered valuer, list of shareholder along with the auditor certificates confirming the said list, then list of creditor along with auditor certificates, then auditor certificate regarding accounting treatment as per section 133 of the Companies Act, then consent affidavit from shareholder and creditor. If the company has a less number of shareholder and creditor, then we can obtain the affidavit, a consent from them by way of affidavit. Otherwise, the company needs to conduct a meeting to obtain the consent from them. Then memorandum of appearance, which is submitted by the authorized representative of the applicant company who is going to appear before NCLT. The next step is filing of application to the Honorable NCLT. So here is our form. First, we need to electronically file our application through NCLT portal. Then NCLT will review the application and if all the compliances are complied and our application is as per the NCLT format, our application get scrutiny free and listing number will be allotted to our application. Then we have to physically file the application to NCLT. Then we get the listing hearing date. The next step is hearing in NCLT. The authorized representative of the applicant company will appear before the NCLT and discuss the matter, and if NCLT deems fits, it may pass the following order. The first is if the consent of the shareholder and creditor for approval of the scheme of merger have already been obtained, then the NCLT will pass dispense the meeting of the shareholder and creditor and order to send the notice of application to statutory authorities for inviting their representation or any query. Then we have to file affidavit in compliance of said order. And if the consent of the shareholder and creditor for approval of the scheme have not been obtained, then the NCLT will pass the following order. Advertise, advertisement of notice for conducting general meeting or meeting of creditors as the case may be. Then sending the notice to the all statutory authorities conducting the meeting. Then affidavit in compliance of said order. Then we have to do the first order compliances. So here is our form. We have to serve the notice to all statutory authority. The statutory authorities include ROC, RD, which is regional director, then income tax, CCIT, Chief Commissioner of Income Tax, OL, that is official liquidator, and such other authorities which is related to the company. For example, if the company is a NBFC company, we need to serve the application to RBI, and if it is a listed company, we need to serve it to SEBI. Then we have to make the affidavit that we are complied with the order. The affidavit first filed through NCLT e-filing portal. Then we have to submit the physical copy to the NCLT. Kindly note that all the physical filing are done in 1+1 basis. That means we have to submit the original copy along with the one photocopy of the same. In case it also depends on the different benches. For example, in some benches, we required to file original copy plus 2 Xerox copy. The next is preparation of petition. And this is how we prepare the petition. The petition includes the following. All the documents are almost same as application. There is a slightly difference that we have to add the first motion order, an affidavit in compliance of order, and the affidavit from the shareholder and creditor, that is a consent affidavit, we not required to annex in the petition. And you may think that what is the difference between application and petition? Then I would like to know, I would like to tell you that in application, we sought the interim relief, that is dispense the meeting of shareholder and creditor, pass the order for sending the notice to stats authorities. And in petition, we sought for the final relief, that is sanctioning the scheme of merger or amalgamation. Step 7 is filing of petition to NCLT. Just like we file application, there is the same step. First, we have to e-file through NCLT portal. Then it will get scrutiny free and listing number will be allotted to our application. Then we have to submit the hard copy of the petition to NCLT. The next is hearing in NCLT. The authorized representative of the applicant company will again appear before the tribunal and brief about the application petition. Then NCLT may pass the order for publication of newspaper advertisement in two newspaper, that is English newspaper and regional newspaper. Then sending notice to stats authorities again. Then affidavit in compliance of order. The next step is second order compliances. The company, or we can say that us, have to send notice which is in form CAA 3 to ROC RD, IT, CCIT, OL, or any other statutory authority. And in second order compliances, there is one extra compliance, right, that is newspaper advertisement. We have to publish the notice in two newspaper, that is English and regional language. Then we have to serve the affidavit in compliance of order through NCLT portal first, then physical filing. The next step is obtain report from a statutory authority, or we can say that obtain non-objection certificate NOC from statutory authorities. In the last step, we serve the notice of petition to all statutory authority. And if any statutory authority, for example, regional director, have any query regarding the scheme or petition, or they may sought for some information, then RD will send us some query, which is known as RD query in general. Then we have to prepare the application and send it to the RD. Sorry, we have to prepare the RD reply and submit to RD. RD will give their observation to NCLT and along with the one photocopy of the same to authorized representative of the applicant company or either company. Then we have to file the reply of RD observation, that is this, which is known as rejoinder. We have to file the rejoinder in reply of the RD observation. Then if we have to obtain the report from official liquidator also. If official liquidator has some query, they will send us. We will prepare the reply and submit to the official liquidator. And if official liquidator is satisfied with our reply, they will send the OL report to NCLT along with one copy to the applicant company or authorized representative. And if there is any other statutory authority who have any query, for example, income tax or RBI, they may send us and we will have to give the reply in due course. The next step is hearing in NCLT. The authorized representative will again appear in NCLT. This hearing may goes 2-3 times also. Then the authorized representative will tell the judges that they obtained the non-objection certificates from a statutory authority or report, and all the compliances, first order and second order compliances are already been made. Then NCLT will pass the order for sanctioning the scheme of amalgamation. Yep. The last step is post-merger compliances. Post-merger compliances includes, first, we have to apply to NCLT for certified true copy of order. NCLT will give us the certified true copy of order. Then we have to submit Form INC 28 within 30 days of obtaining of certified true copy of order. It is for the purpose of informing registrar of companies that the schemes of amalgamation have been approved by the NCLT. Then the company, we have to write a letter to ROC for clubbing the authorized capital of the transferor company into transferee company. That means if there is a two transferor company and each has 10 lakhs authorized capital, then both companies authorized capital, that is 20 lakhs, will be merged in transferee company. and transferee's company authorized capital will automatically increase it. And for the purpose of allotment, if the authorized capital of the transferee company is not sufficient, we have to file Form SH7 for to increase the authorized capital of transferee company. Then the transferee company will have to make some accounting treatment in the books of accounts. And the last step is filing of Form Pass 3, which is for allotment of shares to MCA, that is ROC, Register of Company. That means the registrar, the shareholder of transferor company will get share in the transferee company as specified in the valuation report, that is as per the SWOT ratio. Thank you.